So the big tax question is this: how do wealthy people keep their money working for them when selling their business, real estate, or other highly appreciated assets without paying hundreds of thousands to millions of dollars in tax? What if we, as business and real estate owners who have poured blood, sweat, and tears to growing our wealth, and who didn't hire expensive tax attorneys and CPAs to map out an exit strategy, knew their secrets? Instead of recreating the wheel, why can't we just model the way they deferred 30 to 50% in tax, paid off debt, funded their next business dream, and most importantly, leave a financial legacy to give to the causes we believe in most? What if their secrets weren't complicated at all, and you just need a guide who is a few steps ahead of you? That is the question, and this podcast will give you the answers. My name is Brett Swarts, and welcome to Capital Gains Tax Solutions. Welcome to the Build to Billions podcast, where we guide successful entrepreneurs and investors on their journey from millions to billions. We believe the key to scaling and compounding your wealth and life starts every single day with a mindset and practice of stewardship over ownership and applying billionaire biblical principles. Our ultimate goal is to help you scale and compound your wealth and life so you can give more all the way to help MVPs. My name is Brett Swarts. In each and every episode, we feature the world's top entrepreneurs, millionaires or billionaires, and they share their secrets, wisdom, and insight with us so we can all scale up and make a bigger impact faster. I'm excited about our next guest. She helps high net worth professionals invest in pre-IPO giants like SpaceX, OpenAI, and Stripe before they go public. After closing over 600 million plus in private market deals and leading at firms like Destiny Tech 100 and Forge Global, she has built a white glove brokerage for investors who want exclusive access without the corporate runaround. Please welcome to the show with me, founder of Healey pre-IPO, Christine Healey. Christine, how are we doing?
Good. Hi, Brett. Thanks for having me.
Absolutely. And for our listeners getting to know you for the first time, would you give us just a little bit more about your story and your current focus?
So if you've ever used ChatGPT and thought AI is going to take over everything, how do I get a piece of the action? Or you've seen SpaceX in the news and same thing, thought space travel, amazing. How do I financially get a stake in this? Or you're a busy professional, like a surgeon or a business owner, and you've built some wealth, but you're looking for the next thing to diversify a little bit for a portion of your portfolio from just real estate or public stocks. That's where I come in. So I help investors that are high net worths, many of them very successful in their own fields, to get started in investing in private stocks, specifically huge tech giants like SpaceX or Stripe or OpenAI that you can't find on the public stock market on your regular brokerage app because they're just not there. So I help educate and bring people into this very nuanced world of private stock dealings and help them find sellers and negotiate that next deal.
Fantastic. And if you want to learn more about what Christine is doing and her services, go to healeypreipo.com. That's HEALEY preipo.com. Access to private tech stocks. Okay, so that makes sense. That's pretty clear. Curious how you got into all of these kind of things, Christine, and then let's just dive into some kind of common questions. And we're really talking about building your pre-IPO stock wealth with, again, Christine Healey. So, Christine, how'd you get started with all this?
I started in traditional finance at investment banks, and then switched to a little startup that I saw that was working on this issue of access to private stocks. So at the time, they were talking about building a stock market for private companies. In 2018, that was companies like Airbnb, Lyft, Pinterest that have all now gone public. And I've been doing it ever since. It was fascinating for me to help investors access these companies that weren't on the public markets yet. And I've been doing that literally ever since the past 8 or so years. So used to be Airbnb, Lyft, Pinterest, etc. Now it's Stripe, OpenAI, Anthropic, and a number of other companies that are at that stage where they're perhaps on the brink of going public anytime soon, but are still private companies that you have to privately find a transaction for.
Okay, excellent. That makes sense. So got started in traditional finance and then moved to this niche. Fantastic. So what's the number one secret to, I guess, finding the winners, the pre-IPO winners, the Anthropics, we'll see, they seem to be going to be, I think, the biggest IPO maybe in the history of IPOs. I've heard of this kind of crazy stuff, but the biggest one for AI, maybe you can kind of walk us through that. What's the best way to find these?
Look, there's a huge variety in how these companies do. You have huge success stories or amazing IPOs. Equally, you have, unfortunately, tragic implosions, tragic failures of these companies like FTX, which was a big failure, or WeWork, a number of others. So it's definitely a high risk industry. For that reason, and for regulatory reasons, I don't state expected returns. There's really such a broad spectrum there, from potentially losing all your money through to maybe multiples of your money in return. So it goes into that bucket of your portfolio that's definitely high risk, where you're not getting cash flow from it. You're not likely to get dividends typically. What you're hoping for is that buy low, sell high, and you're hoping for outsized returns. But as I say, because it's risky, you keep that in mind. So some folks try and diversify. Some folks try and just hyper concentrate in their highest conviction names that they understand or believe in the most, because there's no way to get around that risk, really. So in terms of picking industries, there's a huge draw to AI right now. OpenAI, Anthropic, and XAI, a number of other AI companies. But investors just have really different views of what they want to invest in. And so I like to help investors when they have a view. I want to invest in AI. I want to invest in space, or even a specific company. I want to invest in Stripe. My job is to help them find sellers for those stocks, help them understand structures, and then to negotiate terms within that deal.
Okay, got it. So, right, because this is private, this is pre-IPO, so you've got to go. You're basically got to find the sellers. That's interesting. And I guess that's the next question. How are you finding these sellers, and how are you negotiating these deals?
Yeah, so it's really hard for the average investor, particularly if they're in a different field, real estate, medicine, what have you, to have the right network. So because I've been working full time in this industry for 8 or so years, I have a huge network at this point of folks like family offices, secondaries funds, VCs, investment banks, other institutions, but also individuals, like individual investors that buy and sell out of these private positions, as well as employees at some of these top tech companies that may have received employee shares, stock option grants, et cetera. So I try to keep a very broad business, working with a bunch of institutions, a bunch of individuals, so that way we can go to as broad a set of folks as possible to find you a seller. So if you come to me and you say, I want Anthropic, we're going to look at what size you want, any kind of parameters you're working with, any kind of pricing expectations or timeline. And based on that, I'm going to know what is the right universe of sellers to go to, whether it's even international sellers or US. So I'm just constantly broadening my network. And those are the sellers that we go to.
Yeah, I love it. I started out selling commercial real estate in Marcus and Millichap in California. And it's fascinating, right? Like, how did you find the sellers? Well, everything, you call them, right? And you talk to them, and then you meet, title and escrow and anyone that's ancillary services around them, and 1031 exchange companies and lenders and property managers. And eventually you do get a chance, and you get obviously referrals start coming up. And so it's a relationship driven business when it's private. Makes perfect sense. Okay. And so then you're finding and you're asking those, hey, would you be interested in selling, right? Some are all of your stock, and then you're looking to match up obviously an equitable price for both sides. I'm curious, like someone who owns like an OpenAI or an Anthropic, right? There's different reasons people need to sell at different times. How do you come to a equitable price in that negotiation? Like, because it hasn't gone IPO and you're not sure how much it might go up. I'm just kind of curious on the approach there for the buyer and the seller.
One of the biggest adjustments for investors that focus on other asset types or purely public investing is lack of pricing and structure uniformity. So even in a singular company, maybe it's Anthropic or maybe it's Stripe, there could be 5 or more different sellers at a given point in time, potentially holding that stock through different structures and potentially offering a completely different price or timeline even. than each other. So that lack of uniformity is one of the biggest things to keep in mind. And the best way to handle that really is don't necessarily go for that random crowdfunding offer that came through your inbox without even contextualizing the pricing, but actually hopefully trying to find offers to compare, to have an expert like a broker to help you contextualize that pricing or source additional offers, and go in armed with information, because it's not like a public market brokerage where you just go, type in a ticker and it spits out a market price for you. The market price doesn't really exist in the same way in private stocks, because there's a different price for different structures, different sizes, different folks. Maybe like you suggested, a seller has to sell in a certain tax year. Maybe they're willing to take a discount to the market just to get a deal done. So the pricing is really spread out, and so you have to be very tactical around it.
Yeah. I love it. I mean, that's a great answer, and it makes sense. And how do you know unless you have the pulse on it and you're doing the deals? And I do think there's the platforms that have popped up where it's just mass people putting smaller amounts, $500 or $1,000, and or even when it goes IPO on the other side of it, right? And so they're maybe on the other side of the trade where you could have been on this side. So this is fascinating. So let's keep going on this. All right. So what is your average, client, high net worth family that you're working with? Just, a doctor, a real estate investor, owner, business owner, and they're looking to diversify. And of course they always wanted to get into these, right? But they never had a great way to do it, right? I have heard of some groups, if you have like 50 million or more, like with maybe a Raymond James, that all of a sudden you get access to that. What's also the difference between something like that versus what you're doing?
A lot of new market participants or platforms or investment banks are going after a very, very institutional audience. And that's all well and good if your focus is on doing these $100 million deals or just chasing volumes. But that's not my business. I really want to help individuals in particular to get access, or smaller investment firms. The sweet spot for me is a deal size anywhere from 100K to about 5 or 10 million. So within that, I can work with all kinds of different client types. But my mission as a business isn't just to do large institutional deals. It's really just to work flexibly, keep a high close rate, and to not exclude individuals from this. Part of the reason for that is I think individuals have been left out of this asset class for a long time. It's been billionaires and their family offices. It's been professional venture capitalists that have taken the lion's share of the investments in these pre-IPO companies. And there's a real question here about who our future as a society belongs to. Some of these companies that are working on changing the world as we know it through space travel, through AI, who is actually reaping the financial rewards of those innovations? And so I feel really strongly about paying attention to the individual investors, not just the ultra high net worth clients that an investment bank might handle or institutional investors.
Love it. That's a great. I completely understand. That's very helpful to see that value, and it shines through. I love that. So do they need to be accredited investors? Do they, what are there any parameters for the individual investor? Is there a minimum? You said 100,000. Can you give us a little more parameters on that side?
Yeah, you do have to be accredited for this type of investing. So that is a financial hurdle. Often the financial hurdle is even larger, because you could make 200K and be accredited, but that doesn't necessarily mean you're going to hit the minimum on a deal. The minimums on deals can be often 50K to 100K. Occasionally deals might have even larger. And so in practice, we're talking about an even higher level of wealth or income to have the funds to set aside for this type of high risk investing. So often it's someone with a very high salary, like a surgeon or a successful business owner, or someone who might have $3 to $10 million of net worth, or maybe they just sold a company and they've been really illiquid for a long time, getting to that stage where they could sell their ownership in that company. And they're thinking, what's next? I've got a windfall of cash. How do I diversify this and put this in other hopefully high growth businesses to spread my money out and make the the next investments with my money.
Okay, so speaking of selling companies and large capital gains tax exits, I think it's kind of twofold here, right? Those who are pre-IPO stockholders, employees, and they have multiple millions of dollars in Nvidia stock, or now Nvidia is public now, but Anthropic or OpenAI, or these ones you're talking about, and they're faced with these large capital gains tax challenges. To me, the biggest thing that advisors can do is solve problems. The biggest problem for a seller of highly appreciated stock is capital gains tax. So what have you found of ways to either defer or be smart about when you exit with capital gains tax planning?
I always have to say, and I'm told to say every time, I'm not a tax advisor, but there are definitely really interesting quirks that come up in private stocks. That one of them is QSBS, Qualified Small Business Services tax treatment, I think, where you can if you invest or you have equity really early in certain types of companies, you can get up to, I want to say 10 or 12 million, something like that. Completely tax-free if you follow certain guidelines. So QSBS sales of private tech unicorns are becoming, I would say, more and more common. And if you qualify for that tax treatment, you really want to know about it because it can reduce your tax bill in some cases down to zero. There's also rollovers where you could take those funds, put them in another early venture that qualifies, and potentially compound and move that forward, again with zero tax treatment. So that's if you qualify for that, that's amazing. One of my angel investments, I believe, qualified for that, even as an angel, not a founder of that company. So it's just paying attention to what you qualify for, and ideally speaking to a tax specialist that's familiar with startups and startup equity.
Excellent. Yeah. By the way, it's typically a C Corp, it's typically 5 years or more holding, kind of get that seasoning. Those are the key things. But they actually have increased those amounts. I think it's up to like 15 million now, which is nice. And then even I think you might get partial amount, even if you don't get like the full 5 years, but you definitely check with your CPA to get clarity on that. We have a strategy, Christine, where it doesn't require any seasoning, doesn't require the C Corp. And it works for private stock, public stock, business sales, C Corps, S Corps, LLCs. We recently did it for a $70+ million business exit out of the Northeast, another 13 million for a deal out of San Diego. And it's using an installment sale method and with a trust that allows for the deferral and then the diversification of the wealth. And most people just don't know about it, and they just sell, right? I remember as a real estate agent, Marcus and Melchap selling commercial real estate. It's like if you knew about the 1031 exchange, you had an advantage to help people. Kind of like we talking about the rollover. I'd be curious to hear from you. Are there times when you're looking to help somebody exit the Anthropic, but they're like, look, I love it, but I'm up so much and like the tax would be crushing. So no, I'm just going to pass, right? But if you had a solution, a capital gains tax solution, that it could help bridge that gap between what the buyer is willing to pay, sellers willing to sell out post-tax. To me, that's the big missing piece, that bridge between the sell and the tax, because especially in states like California, New York, New Jersey, these higher tax states.
I think there's more and more innovations and more service providers that are trying to tackle some of those problems. The pre-IPO trading industry is still maybe not in its very early stages, but still in that semi-nascent stage where a lot of this is very new. Because of that, new services, new businesses are popping up, but there's still so many spaces left to optimize. For example, access to data is not amazing in this industry. It's still developing, and people are innovating around that, as well as what are the ways to improve tax treatment, or what are better strategies. Sometimes even exercising your options if you're at one of these big tech companies in order to sell is a huge financial hurdle. It's not unheard of for these employees to have to take out short-term loans, sometimes hundreds of thousands of dollars, just for the exercise of those options, or the tax bill that comes from exercising options at times. The tax treatment of options can be kind of funny. So sometimes the longer you leave it to exercise, the more expensive it becomes, both for the exercise and for the tax bill. And sometimes the best strategy is just to do it as early as you can if you truly believe that company is going to be an outperformer. And that's the hard part because you don't want to pay so much out of pocket if you're not sure this company is going to ultimately go public or be a breakout success. Then you're out all that money out of pocket. But if it's a company you have really, really strong conviction on, then in theory, the sooner you exercise, the better, because you get a lower exercise cost compared to if the company goes up and up in value and that fair value increases. So a lot of the time it's just do it while it's cheap if you believe in the company. But then there's a lot of inherent risk in that if you pay a lot and the company doesn't move forward in the way that you expect.
Fascinating. I think there's a better way, and it's using a trust with an installment sale. We actually do it with using our company called Capital Gains Tax Solutions. So we build a trust that you can sell at any time. So you're not dictated by the tax or the exercise or this or that. Just sell when you think it's appropriate, all or some of the stock, and defer your tax using an installment sale method, 453 installment sale reporting. Example would be, if you own a ton of stock, what do most people do? They borrow against it so they don't have to get taxed, right? It's a classic example. Our scenario, you actually sell the stock out in the market, but the trust first buys a trust, and the trust sells it to the ultimate buyer. So a three-party transaction. You do it in that order. You can defer all the tax and only pay taxes you receive payment, kind of like an IRA. And if people want to learn more about this, go to capitalgainstaxsolutions.com. It's capitalgainstaxsolutions.com, and you can learn more about all that. Okay, so give us a live deal, a live opportunity, and by the way, are you getting like exclusive listings or exclusive rights to sell from these private individuals or private employees for 3 to 6 months at this price? Is that sort of basically like if you're selling real estate, but you're listing with Christine to help you sell your stock? Is that a good analogy there?
Yeah, I actually don't ask for exclusivity on the vast majority of my deals because I know a burden that places on someone that's wanting to buy or wanting to sell. And especially because in this market, there's so many folks that are purporting to offer certain service, but frankly suck at it or can't really deliver. And the quality is really, really hit or miss. So I often say to clients, let me deliver for you and see my results. I'm not going to ask you for exclusivity, whether it's buyer or seller. And I just show them the results. And from then there's a kind of implicit exclusivity just in the sense of they come to me for the next deal. They show it to me before they show somebody else. And so exclusivity isn't something I've actually had to deal with that much because I know who my repeat clients are and I'm trying to build trust by outperforming essentially in the open market. I love to compete. And that's how I win my clients, not by binding them in legal terms.
Beautiful. So non-exclusive is the way you work. And then do you just set a general strike price, an agreed upon price, or is it just they'd be open? Like how do you know which ones to work on versus not? Like what kind of, how do you do that?
Yeah, it takes a lot of intuition and experience. There are a ton of deals in this market that are red herrings or too good to be true, or buyers or sellers are just fishing around and not really serious. So it can be hugely time wasting if you don't have your BS radar finely tuned and know which deals or which counterparties are actually reliable. So that's, I think, one of the benefits of working with the broker is dealing with someone that has the experience to actually have a high hit rate. There's a really big problem, especially in the past year or two, most of all, where buyers have gotten an offer. Okay, there's an OpenAI deal coming up. They think it's reliable. They take it at face value. Some of them go as far as to sign and wire for a deal. And then the deal changes last minute, allocation cut back. Seller didn't have the allocation in a primary round. They thought they did something like that. And deals get canceled and refunded. That's the dynamic that you're trying to avoid by getting a vibe and getting a good sense off the bat as to who to work with and who not to work with. So, and a lot of that comes from experience. So if I'm dealing with a seller that I've closed 20 deals with, they're highly reliable, their fund is SEC registered, they're audited, I know how institutionally they operate, then that's a client that I'm more comfortable introducing my buyers to because I know how they've delivered in the past. And that's the benefit, I think, of having been in this business a long time. But awesome. Pricing is always going to come down to supply and demand and a negotiation between buyer and seller. So I'm not here trying to dictate pricing, but I'm trying to help them work it out amongst themselves. It's typically pinned to where the last fundraising round of a company officially came out to. So SpaceX, we might look at the latest tender round at 800 billion, for example. Or Stripe, we might look at the latest tender pricing. And then it's loosely pinned there, but it's going to be either higher or lower based on where the market has transpired since that data point. So it will be higher or lower, just depending on what buyers and sellers are accepting at that time.
Got it. Awesome. We're starting with Christine Healey, by the way. You can go to healeypreipo.com, healeypreipo.com, and you can submit your information if you want to jump on her opportunities to buy some pre-IPO stocks. You need to be a accredited investor. Check that out if you don't know what that means. Basically, it's $1 million net worth or more, excluding your home, residence, or a certain income limit per year. So, all right, what haven't I asked you that I should have asked you, Christine? Because I think you've covered quite a bit of it.
Yeah, we've definitely covered a lot. Maybe things to look out for. I think, again, public market investors expect that they go on their Fidelity and it is going to spit out a market price. It's going to give them a reliable seller. You want to really know what to watch out for on the negative end. There are unfortunately bad actors in this industry. If it's the wild, wild west, some say, in private stock dealing, and you want to look out for certain things. Number one, you want to make sure your broker is actually licensed. So you can Google FINRA broker check, type in their name, like you can type in Christine Healey, and just make sure they have the right licenses to be doing this type of work, or they're licensed at all. That would be great to know. And then secondly, to be very, very diligent and just use common sense really in who you work with, your broker, make sure you trust them, and any sellers you're dealing with, to make sure they're answering your questions, they're being forthcoming about any documentation around what they're selling, and just pay close attention because these are big financial investments at the end of the day. And you can't just assume that everything is at face value like you could maybe a bit more in the public markets.
Excellent. You ready for the lightning round?
Yes.
All right. Knowing what you know now, if you go back to your 20-year-old self, what's the one golden nugget make sure to tell yourself to do?
Oh my God. Take care of your health. All I wanted to do was make money and, go to Wall Street and completely burn out. So I think I've learned over the years that balance is actually the key to financial longevity as well.
Fantastic. Number one book you recommend or gifted the most in the past year?
Yeah. The Courage to Be Disliked.
Love that name. I'm going to check that out. Of the book. What are you most curious about right now?
I'm curious about SpaceX having announced a potential IPO in 2026. I think that will change the private and the public markets as we know it. Will it be a huge success? Will it not be as great as people are hyping it up to be? I think whatever happens, it's going to be huge and have a lot of implications for investing.
Awesome. How do you best stay ultra healthy and super disciplined?
Super disciplined, honestly, just by being obsessed and doing the work that I find genuinely the most interesting and that I'm happy to do for long, long, long periods of time. And that keeps me going, that I'm excited to do in the morning. Healthy, I think mental health, is really important to keep in check. Balance, nervous system regulation, knowing yourself, and that type of thing is so important. And then I do a lot of walking.
Fantastic. Number one leadership quote or theme that you strive to live by?
Theme is probably a deal is in the details, or just being very, very detail oriented. I think by knowing a process from start to finish, or not just being that salesy person, but also knowing a bit of the operations, like being willing to get into the weeds. I think that's what separates really exceptional performers from average performers.
Fantastic. And the very last question, Christine, and it's this: stewardship over ownership and staying centered in your values. That's part of the thing that we really try to really encourage folks to do, is like, hey, everything we've been given is a gift. It's a gift from God to be a blessing and help to others, to go out and make a huge impact in the world. So how do you best keep a mindset of stewardship over ownership and stay centered in your values?
One of the biggest things that I've strived for in my life is my own financial freedom, and then being able to help others I care about, whether that's family members, friends, to achieve financial freedom in their own way as well. And that's partly why I love working directly with clients, because I see it as an extension of that mission, where I'm not just hoarding these private deals for myself or for my family members, but I really want more people to have access to opportunities, which in some cases have been extraordinary, created huge generational wealth. And I want more people to have access to that if it's right for them, and not just be excluded because they're not in the inside circle of Elon Musk, or have that privilege in other ways.
Christine Healey, it's been more than a pleasure to have you on the show. And thank you for sharing your wisdom, your insight. I think you've taken a niche approach to helping people unlock pre-IPO financial wealth. I want to encourage you to keep using your gifts and talents to help more people do this, just this. For our listeners who want to get in touch with you one last time, what's the best place for them to find you?
HealeyPreIPO.com. You can sign up for my mailing list there. I send around pre-IPO market insights. You can just get your feet wet with zero commitment, and just see what it's all about.
Amazing. Thank you, Christine Healey. And also want to thank all of our listeners and viewers for watching or viewing another episode of the Build It to Billions podcast. We're also streaming on our YouTube channels for Capital Gains Tax Solution, and also our podcast there. We're on this journey with you to scale it from millions to billions so we can give more all the way to help MVPs, the most vulnerable people. My name is Brett Swarts, and I want to encourage you to take action today. I'm excited to work with Christine here for some pre-IPO opportunities, and I want you to consider the same as well. If you're exiting a highly appreciated business, Bitcoin stock, pre-IPO stock, public or private stock, doesn't matter. $1 million net proceeds, $1 million gain, bigger transactions. We want to encourage you to capitalgainstaxsolutions.com to build a capital gains tax exit plan. We actually wrote a book on it with Kevin Harrington from Shark Tank called Building a Capital Gains Tax Exit Plan. You can get that on Amazon, and it's basically the playbook and learning how to do this mostly through real estate, and then we have evolved through Bitcoin and stock and business exits. But don't get stuck not selling when you want to sell because of capital gains tax. Build a plan with our team. We can help you. Go to capitalgainstaxsolutions.com. Appreciate everyone listening or viewing, and we'll talk to you again real soon.
You have just listened to another information-packed episode of Capital Gains Tax Solutions with Brett Swarts. We hope you enjoyed today's show and found it helpful. Visit capitalgainstaxsolutions.com to access the show notes and to access more resources. Don't forget to leave a review and join us again next time.